Good morning, everyone, and welcome to the European crossover webinar. And sorry for the delayed start. Had forgotten to set my alarm, and long week, and was so tired that I guess when I didn't set the alarm, obviously didn't wake up. Let's go on and move into the analysis. Big day in front of us with the non-farm payroll. Bear with me, and let's go on and get the economic calendar up in front of us. Now, we did go on to get final PMI market, that is market service PMI out of the Eurozone at 3 a.m. Eastern. That came in obviously weak here at 26.4, but and we did get UK services PMI final at 34.5. The key is actually the big report at 8:30 Eastern, which is going to be non-farm payroll. Obviously, they're not expecting the impact yet from coronavirus. They're looking for a negative 100,000 with payrolls at minus 163,000 and unemployment rate to move to 3.8%. So that, like I said, the key will be the number right now, as I mentioned, with the timeline not catching, or maybe catching just the edge of coronavirus. It'll be interesting to see what the actual number is and how the market's going to go and look at it now. A little bit later on in the morning, we're going to have ISM manufacturing PMI. That will be at 44, or what they're looking for is Reuters poll. Time is going to be at 10 a.m. Eastern. Then obviously some of the sub-indexes like the non-manufacturing, ISM manufacturing employment and new orders numbers, we'll have to see how those come out. Once again, a bit on the fringes of the impact from coronavirus. Let's go and move this over here. And let's go and quickly move right on into the analysis. Okay, so taking a look here at the euro. The euro kept up its unabated slide with support on Friday coming in at 802 and resistance at 929, 956. Well, you can see here we even took out 802 just slightly. And with NFP, you think there'd probably be a push or a reaction maybe a little bit higher, considering how weak that the numbers would potentially be, and the impact or the view on the U.S. economy and dollar. But still, it kept up its slide. So we're actually going to look down here at this major weekly number, which is going to be 776, is going to be our support. And with resistance, is going to be right here on this, right here at this level, which is going to be 880. You can see the key right here. We kind of had run up here on this high and then had fallen back. And this is right where we closed here, and a little bit lower than the most recent dip down here, which was actually on Wednesday. And then today when we broke below that, or actually Thursday when we broke below that. So the resistance that we're going to be looking at is going to be 880. And let's go and move into the cable. So cable closed Thursday session with a gravestone doji. Resistance remains going to be the 25.20. You can see this little gravestone doji here, but we've been trading in such a tight range, but nonetheless, we'll, and you could take a look here. It actually comes in where the market probably run into some trouble before 25, but where will the market potentially go and run into some trouble if we do pop those stops? Where will we find some sort of resistance? And that's going to be at 25.20, which is the resistance we've had all along or over the last couple of days, with support at 22.54. Followed by 21.92, but we'll be listing 22.54, which is what we had. So obviously in a tight range like this, no changes. Let's go on and move into the Aussie. So the Aussie closed slightly, and you can see here, right here on Thursday, now we're pressing lower. Closed slightly below support at level of 60.63 with a spinning candle. Sticks, you can see right here. The wick might be a little long, but like I said, it's with the tight ranges we have. Generally, with this a spinning candle, you'll see that generally it's going to mean that they've run out of momentum. So usually on a bigger move here, you get a small spinning candle, spinning top. Generally means that there's going to be a pause. But the ranges have been so tight, but that is the formation we have. So you continue to see this market move lower as we've broken below 60.63. We had mentioned before, if we got a close below 60.63, that would give us a solid sell signal. Well, we're starting to see this push below that. And actually, resistance comes in right here at 60.11. You can see it's pressing just a little bit beyond that. This is going to be the key support here on this continued break, which is going to be right there at 59.58. And resistance, well, resistance is going to be right here at that key level and actually just a bit above it. So it's going to be right there. Call it 60.80. 60.80 for resistance. So we'll move into the dollar CAD, or actually the Kiwi. So the Kiwi is closed right on support level of 59.14, but you can see right, and that was yet Thursday's close. But just like the Aussie, we pushed lower. Support below remains 58.53, but we've actually come right to that 58.53. If we push lower, it has the same technical setup as the Aussie dollar. So this is going to be the key support on this dip right here. Obviously the close here, open right here. It's going to be right there, which is going to be 58.25. And resistance is going to be right there at 59.14. Moving on to the dollar CAD. The dollar CAD finished the day with the spinning top, although this week was somewhat longer right here. The body might be just a bit wider than you'd expect, and the wick a little bit longer, but once again, nonetheless, a spinning top candle. The market's in pause mode while awaiting. 42 is going to be the key on a closing basis, with 42.72 as resistance, and 40.56 is going to be support. Let's go move on to the Peso. the peso remains on the bid. The breakout level will be a close above the resistance level. You can see that coming in right there at 24.60. We had it listed as for 24.61, but we've actually breached below that. But that's still going to be key resistance here. We're going to leave it here at this level because that's key not only intraday, and we did go and pop some stops above here, but you can see we've dipped right below that. That's going to be resistance. With support at 23.74. On this pullback, we get that. Moving on to the Dalian. So the Dalian closed above the prior 3 sessions on this bar right here. You can see that taking out those sessions. Resistance remains 850. Support is 713. We can see right there. We've made up to 850 and we're just sitting there. And that is going to be the resistance here. And support's going to be 713. Quite a ways away from where we are right now. We can actually look on a 2-hour chart, see if we can get something a little bit closer. 713 would be key, but right now it just appears to be the dollar's just straight up on the bid. It's going to be right there coming across here. 756. 756. You can almost make the case even right here. 776. We're going to actually you can see this coming across here, these touches coming here. So we'll split the difference. It's going to be 765. 765. So the dollar index closed above 100 as traders weigh whether we will see another rush into the dollar. Resistance is going to be par 72 with support at 99.51. So par 72 on the upside. There we go. So good close here, and we've actually continued to push beyond this. But once again, we're looking at par 72 so far. The high's been actually par 74, so we're right there, and we've kind of paired back here. Let's go and move into the cross rates. Looking here at the Kiwi Yen, you can see it's been quiet. I mean, here's Friday's session here. I mean, Thursday, very tight range, and not that big of a range even the prior day on Wednesday. We're just sitting exceptionally quiet. Resistance, you can see coming in right there on that body close here, which is going to be 64. And we can actually push a little bit higher to get some touches. You can see right there on this low there. It's going to come at 64.37. And support right there at 67.86. Oh, not 67. Here. Coming right across and just a little bit lower there. 62.85. Moving on to the euro yen. I would have thought we got a little bit better of a pause here. We did go in and trigger take out the support here at 1704 yesterday. We're holding above it, but the sell-off has just been, look at that. It's just been a deluge, down here. And we've actually gone and tripped all kinds of support, although we're holding just above this key weekly level. Support on the downside. Actually, today's lows, you can see the low from here, the high from here, confluence is almost with this low right here, and then we just took that out on the low. This will actually be the low, which is going to be today's, or the support is going to be today's low, which is going to be 1672. And boy, this market is exceptionally oversold, but resistance, you can see the touch is coming right across here. And just above that high session for yesterday, which is going to be 1775. Moving on to the euro odd. Same thing here, in that the prior session was very, very tight. Same thing here. And then 2 days prior, we had this bit of a hammer bottom. So if we're going to press some stops, probably not likely. But if we are going to, resistance is going to be just right there on the lows and the close right there, which is going to be 8104. And support, and once again, they've kept it fairly tight. It's going to be just below this low, and you can see here it's 77.30. So that is actually going to be Tuesday's low, which is going to be support, 77.30. Let's go and move into the Euro Kiwi. Also another tight session. It's, a bit, I wouldn't say not odd, but, we had this huge run up, then big day, and then obviously we paired back. And now we're just kind of hanging here in this very tight range. Probably looks a lot tighter than it actually is, but still nonetheless trading in a near 175 pip range or 150. You can see here resistance is going to come in. If we push a little bit higher, and we're going to see if we can trip those stops, is going to come in right there before that high, which is going to be 8601. And support comes in right there. You can see that coming across these touches is going to be 82.85. And onto the Aussie yen. A lot of these yen pairs, I was going to say for whatever reason, but I mean, they're just in a very tight range. Today's focus really is going to be on the dollar. And we posted a report, remember, a couple of days ago. It actually might have been Tuesday. It was a Reuters story. Hey, do you think we'll see another rush into the dollar? Seemed a little bit odd because at the time the dollar was still relatively weak. Now we're seeing the dollar on its highs. So the focus, obviously, today also with NFP is going to be on this dollar, but these yen pairs are relatively quiet to a certain extent, with the exception of the euro yen. But moving on here to the Aussie yen. Resistance, it's going to be right there, just above the highs, which is going to be 65.72. And support if we do trip the stops down here, 64.26. On to the guppy. Just as we mentioned here, some of these yen pairs have just been quiet, and once again, this has been very quiet. We saw some pretty big ranges as the sterling came back, but we're keeping it pretty much in a tight range. If we're looking up here, and we did put the resistance coming in right there, which was 33, right there, 33.84. We tripped above it, but we're going to keep it just before there, which is going to be 33.84. Support is going to be this low right here, 32.15, which we had already in place, so that's fine. Let's go into the sterling odd. Well, it's been up and away, and even though we're starting off, we actually had 479 yesterday's resistance, and we popped up as high as 6. Look at that. Let's go and move into the 2-hour chart, see if we can see something a little bit closer here. Wow, it really doesn't come up until 573. Well, actually, 566. We're going to go with this prior high right here, which is not that far away, but look right there, just above today's highs, which is going to be 543. And support right there coming across these touches, which is going to be 366 or 362. Well, you can see here, euro continues to go and press lower, and look at the dollar, just still marching higher. We have, as I said, our resistance is at par 72. Concern here, like I said, is traders, especially we may see an impact with equities following the NFP. And if we do see that, we just might have traders continue to press into or push into the dollar. And once again, just to go over those numbers, although this is on the edges of the coronavirus, so not sure if we're going to see that big impact, but on non-farm payrolls, they're looking for minus 100,000. Last month was, for the prior reported month, was 273,000. Private payrolls down 163. I guess the concerns or the surprise is going to be if we see that impact come in much sooner on this. Manufacturing obviously down 20,000. Moving on, what we're looking for, market services, final PMI at 9:45 Eastern, non-manufacturing at 10 a.m. Eastern, as well as some of the sub-indexes like the employment and new orders index and prices paid out of the ISM, once again at 10 a.m. Eastern. That will be the focus. So I'll go and get the bias chart posted. Once again, forgot to set the alarm this morning. I guess it's been a long week. I just completely slept right through that and just woke up and looked at my watches. So what the heck, look how late it is. But we're able to get the analysis in, get a review of what those numbers may look like for non-farm payroll, and we'll see you in the chat room shortly.